Welcome back to Explain the Charts, everyone. Today, August 10th, 2025, we're dissecting the USDCAD currency pair, a fascinating cross that's currently influenced by a confluence of significant economic events. Let's start with the current news and events shaping the sentiment around the US dollar and Canadian dollar. The overarching theme for the US dollar is weakness, primarily driven by strong expectations of a Federal Reserve interest rate cut. Traders are highly confident that the FOMC will cut rates by 25 basis points at its next meeting, a sentiment reinforced by a recent dovish appointment to the FOMC. This dovish outlook, combined with disappointing July jobs reports and tariff rumors, has broadly pushed the US dollar lower. On the Canadian side, we've seen the Canadian dollar weaken after its own disappointing July jobs report. This creates a complex scenario for USDCAD, as both currencies are facing headwinds, but the relative strength or weakness dictates the pair's direction. Looking at the long-term daily chart, the overall picture of USDCAD has been quite volatile. You can observe some extremely sharp drops in the historical data, particularly in late 2024 and early 2025, which are highly anomalous for a currency pair and likely indicate data normalization or unusual event representation. For a more consistent analysis, we'll now zoom into the more recent, stable price action to identify clearer trends and levels. Now focusing on the daily chart for 2025, from January onwards, we can see more typical price fluctuations and discern clearer patterns. Despite the overall narrative of US dollar weakness, the USDCAD pair has shown resilience, often finding support around the 1.35 to 1.36 levels. Conversely, resistance has consistently emerged near the 1.38 to 1.39 range. The recent Investing.com news indicates market action is testing a critical make-or-break point near 1.3720. If we hold above this level, it suggests a potential positive reversal, aligning with Economies.com's view of a main bullish trend attacking 1.3860 resistance. However, other analysts like UBS project a decline towards 1.34 to 1.35 in the second half of 2025, suggesting a bearish long-term outlook. Action Forex also suggests a deeper fall to retest the 1.3538 low, reinforcing a bearish short to medium-term bias. Let's get even more granular and examine the 15-minute chart, covering the most recent days from August 5th to August 8th. This short-term view reveals the immediate volatility and intraday levels that traders are closely watching. We can see the price hovered around the 1.3740 to 1.3760 range, with several minor pullbacks and attempts to break higher. Notice the relatively consistent volume throughout this period, indicating active trading around these levels. The 1.3750 level seems to be acting as a minor pivot point, with the price oscillating above and below it. A clear break and sustained movement above 1.3760 would suggest short-term bullish momentum, while a drop below 1.3740 could signal a push towards the 1.3720 make-or-break level mentioned in the news. While our latest data for the 15-minute and daily charts brings us up to August 8th, let's briefly look at the 1-hour chart from earlier in July for broader recent context, as this data set provides insight into the midterm price behavior leading up to the current period. From July 21st to July 24th, the USDCAD pair generally saw a slight downtrend, moving from around 1.372 to 1.36. This descent included several lower highs and lower lows, indicating prevailing bearish pressure during this period. Volume remained consistent, suggesting sustained selling interest. The key support level around 1.36 established during this time would be an important reference point if the current price were to decline further, potentially aligning with some of the bearish analyst predictions. So, what does this all mean for USDCAD traders? Let's recap the key price levels and potential scenarios. The critical level to watch in the immediate term is 1.3720. Its breach could dictate the short-term direction. To be bullish, we need to see a decisive break and sustained trading above the 1.3760 resistance level, potentially aiming for 1.3860 and beyond. This scenario is reinforced if the Federal Reserve signals a more cautious approach to rate cuts than currently expected, or if Canadian economic data continues to disappoint, making the CAD proportionally weaker than the USD. The likelihood of a strong bullish reversal without a significant shift in fundamentals seems moderate, perhaps 40%. Conversely, to be bearish, a sustained break below 1.3720 would be a strong signal, with targets at 1.36 and the critical 1.3538 support level. This bearish outlook is strongly supported by UBS's forecast for a decline towards 1.34 to 1.35 in the latter half of 2025 and Action Forex's prediction of a retest of 1.3538. Further confirmation would come from consistently weak U.S. economic data, solidifying Fed rate cut expectations, making the USD less attractive. The likelihood of a bearish continuation from current levels is relatively high, around 60%, given the underlying fundamental pressures on the USD and the technical targets. Long-term, the consensus leans bearish due to Fed policy, but short-term bounces are always possible, especially if CAD fundamentals worsen unexpectedly. Keep a close eye on upcoming ISM data and any fresh commentary from the Fed, as these will be crucial catalysts. Additionally, monitor Canadian economic reports, as their relative strength or weakness against the US dollar will play a significant role in USDCAD's movements. Trade cautiously and always manage your risk effectively around these key levels.